Oh my God, oh my God, oh my God. Panic, panic, panic. Is it going to 70,000? Are we all going to die? What am I going to do? No, no, no. In 2017, it went down 28% in 5 days, and then it kind of sideways chopped and then rallied. It will decouple from this chart going forwards from here. That I will give a high probability, a 70% probability. The low is in, it will decouple, and eventually it will go. The next phase will be alt season. Basically, we've just crossed 50 in the ISM. That doesn't mean instant alt season right now. Give me my alts. Where's banana zone? Banana zone's not happening. The banana zone's failed. You've slipped on the banana skin. Shut the fuck up. It takes time. It'll all play out. As the ISM accelerates, altcoins will accelerate.
Bitcoin may have already hit its cycle low, with a 70% probability, according to Real Vision CEO Raoul Pal. If true, this could pave the way for a massive altcoin surge. The crypto market has been experiencing high volatility, with Bitcoin's recent gains followed by a 3% pullback. All eyes are on inflation data, which could influence the Federal Reserve's next move on interest rates. Fed Chair Jerome Powell has indicated that a rate cut isn't happening soon, keeping investors on edge. Despite this, Raoul Pal remains extremely bullish, stating that the final trigger for a massive rally is central bank liquidity. With new stimulus likely on the way, Pal expects Bitcoin and altcoins to enter their next explosive phase. Stay tuned as Raoul Pal shares insights on Bitcoin's bottom, what's next for crypto, and the key catalysts driving the market's next big move.
Also, if you enjoy listening to crypto-related content, please show your support by liking and subscribing to this channel by following the link in my bio, and get access to my free daily crypto updates and expert predictions direct to your inbox. Each newsletter contains on-chain data, forecasts and expert predictions. All of this is available free of charge. It only takes a moment to sign up and you can always change your mind later.
Now back over to Raoul Pal.
Global M2, last time, this time, same pattern. That is the same pattern as the dollar. It should all play out the same way. Global M2 is a good proxy for global liquidity, which means number go up. The other thing that people get very confused about is they're like, well, what happens if the Fed don't cut much more? I don't care. What happens if rates don't go down a lot? I don't care. What happens if they don't drain the Treasury General account? I don't care. You've got to understand the global picture is the big picture. And the global picture, like 2017, will most likely be driven by China. I think the US will stimulate, but China is the big one. Chinese bond yields are now at 1% or somewhere close to it. They have run out of runway. And what does running out of runway? Jay Powell told you today, running out of runway, i.e. no rates to cut, means QE, baby, and more cowbell. The Chinese have I think when I looked at the calculation in my Excel, I think I got to, they need a fuck ton of QE to do. So yeah, I think the calculation was a fuck ton. They have to print money like crazy. Why? They have an aging population, massive debts. They need to service their debts. Everybody's in the same boat. This, my friends, is the everything code. I've bleated on forever about it. You kind of half get it. It's the fact that the only way of servicing the debts is to debase the currency, and the Chinese will do a lot of debasing. However, they can't do it until Trump beats them over the head with the strong dollar, which is happening today, and saying, you will agree our tariffs, which is happening right now. And when they agree the tariffs, he will say, I'll give you the carrot after the stick. The carrot is a weaker dollar. He did that in 2017. He will do it again now. The weaker dollar plus the lack of spending from Doge, i.e. the lowering of spending, will mean that rates come down as well. And what we get is the banana zone, the next phase. It is all to play for. There is nothing else going on. There is nothing to panic about. There is nothing wrong. It is all a piece of beauty. Global M2, every time we get to this point, it comes, it breaks out, it retests, it goes higher. We're exactly at the right point where this should happen again. Next phase, global M2 going up, the weaker dollar. There's global M2 and Bitcoin. Oh my God, I hear you say, because I hear you all the time. Oh my God, oh my God, oh my God, panic, panic, panic. Is it going to 70,000? Are we all going to die? What am I going to do? No, no, no. In 2017, it went down 28% in 5 days, and then it kind of sideways chopped and then rallied. It will decouple from this chart going forwards from here. That I will give a high probability, a 7% probability. The low is in, it will decouple, and eventually it will go. The next phase will be alt season. The business cycle is picking up, new orders are screaming higher. The business cycle is the driver of global earnings. Global earnings get recycled into risk. Recycling into risk means risk assets like small cap stocks, through to commodities, through to alts in crypto go higher. The business cycle has only just started. A number above 50 for the ISM is expansion of the business cycle. We've just had our first print since God knows when of this going on the upside through 50. Last time was 2020. So we've got the cycle to play out. We are nowhere near the peak in the cycle, which I'll come to in a sec. New orders, less inventories. This is a 3-month lead, screaming even higher. The business cycle is going to pick up fast. And financial conditions, the dollar, oil, rates, they say, well, it should go to at least 55.6, but that would be low for the ISM because guess what? We think the dollar goes lower, rates go lower, and oil goes lower. So that should push this up into the 60s, which extends the cycle further. So we're at least 9 months away from a cycle peak. So it is very interesting where we are. It is all very positive. When we look at the overbought, oversold indicator of where we are in the cycle with crypto, we're nowhere near overbought. We're just starting. Bitcoin, every time the ISM peaks, Bitcoin peaks. When the ISM breaks 50, Bitcoin accelerates. We are at the acceleration phase, not the peaking phase. Anybody who tells you otherwise is a fucking moron. So we're at the acceleration phase. We've got liquidity coming. The ISM is not going to peak until the end of the year, maybe even into 2026. There is nothing, literally nothing to concern yourself. Here's the ISM and a kind of detrended, some fancy thing that Julian does with this, gives you a pricing model of Bitcoin. I mean, if the ISM goes up to 60, where it should be going, I mean, we're talking Bitcoin in the 250, 350, whatever thousand level. We ain't even started. Oh, and altcoins will outperform Bitcoin. Here's altcoins percentage of total market cap. Basically, we've just crossed 50 in the ISM. That doesn't mean instant alt season right now. Give me my alts. Where's Banana Zone? Banana Zone's not happening. The Banana Zone's failed. You've slipped on the banana skin. Shut the fuck up. It takes time. It'll all play out. As the ISM accelerates, altcoins will accelerate. So, wages. Wage tracker growth going lower. Therefore, we will not see wages increasing for a while, if at all, depending whether AI breaks it entirely. Ain't concerned about that. Oh, home prices. Well, home prices are a massive drag because there's a 17-month lead. So home prices will be bringing down CPI shelter, which is the largest part of CPI. If the largest part of core CPI is shelter, it ain't going up. When rates go down, guess what? Owner equivalence rents come down, and that drags down CPI. Look at the Cleveland New Tenant Rent Index, 3-quarter lead. It's puking, it's gone below zero. There is no inflation, my friends. Let's take away shelter and look at all items less shelter, because shelter's the lagging one, 1.9%. I mean, really, dudes? And then we'd use the Mount Fuji chart of truth that Julian and I have been using forever. Like, we take all the inflation episodes, the major inflation episodes, compare them to this one, and guess what? Inflation is coming lower. So we will get cyclical inflation later in the thing. There's nothing structural. We're not going back to the 1970s. None of that's going to happen. Literally none of that's going to happen. Tariffs are not inflationary. It wasn't inflationary last time. It won't be this time. None of that is going to happen. It'll just be a pretty ordinary cycle. So that tells me dips are for buying. Let's have a look at it versus the 2017 cycle. Are we near the top? No, we're fucking near. Are we going to follow this exactly? No. Are we going to do decently based on this? I think so. I think it's going to rhyme more than people expect, and we will have a stronger cycle than people expect. The Nasdaq, for those of you who still bother to trade equities, which I know some of you did, is following the same pattern. It's all like a rerun of the previous Trump. Because he's got the same policies, basically, apart from with the new tech stimulus. So let's go back. Again, Julian talked about this in his presentation, but I want to hammer it home to you. You guys all have PTSD from the last cycle. It finished early. Is it going to happen again? Am I going to lose my money? Am I going to round trip all my gains? Will I die? Will I have to drink Bud Light for the rest of my life? Or can I drink champagne? All of these stories. Blah, 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 blah. The orange zone market goes higher, right? But it didn't really in 2021. Well, what happened in 2021? Oh, the ISM peaked. Do you remember? Raoul told you a minute ago, when the ISM peaks is when you need to be worried. Oh yes, the ISM peaked in March 2020. 2021. Previously, it peaked in January, February 2018. Guess what? That's when ETH peaked. Also 2013. It works every time. And where are we now? Oh, we're at the bottom of the ISM. Oh, how silly of me to be worried about the about the market peaking. For fuck's sake, people. Oh yeah, from the halving. We've only done, is it from the halving or from the low? We've only done an 8x from the low. We did an 85x and a 46x. We only started. Liquidity, as I said, peaked in March 2021. We're now negative currently by this measure of liquidity. If I use the global M2, we're just positive, but we're nowhere near there to be a liquidity peak. As we said, the ISM peaked March 2021. So let's look at it. That was what was happening in March 2021. Look at that. Financial conditions were falling. And the ISM, well, it had peaked at over 60. And let's look at the current one now. You ready, kids? The opposite. It's bottoming. And the green, the financial conditions index, will be going the other way. And the last time it did this, it went up a lot, blah, blah, blah. This is the chart. Again, everyone's like, where's my banana zone? It's failed. It's like the banana zone is a period of time and a price action that is nuanced because it goes in bursts and then corrections. So the banana zone started from September onwards last year. The market came up and did what it did every single time. The correction after banana zone phase 1. So correction phase. Then banana zone phase 2 kicks in and it goes fucking la. It goes bananas. Then guess what? Correction phase 2 fits in. And then we go to the final blow off top.
Thanks for watching. Don't forget to subscribe to access my free daily crypto updates and expert predictions direct to your inbox.